What is up, everybody? Welcome back to Stock Talk with Paul. Today we're going to be learning about candlestick patterns and how a single candlestick can give you information, as well as multiple candlesticks that will form a pattern to give us information. So before we get started, if you haven't already, why don't you head on over and subscribe to the channel. All right, so let's do a real quick recap for those of us who are just starting to learn. Um, these green candles are going to be your bullish candles. Your red ones are going to be your bearish candles. Your bullish candles are always going to open at the bottom and close at the top. Your bearish are always going to open at the top and close at the bottom. Where all you see all this red in this open space, this is called the body. And these things are called your wicks or your shadows. So they're just going to represent the high of the day or the session, just depends on what time frame you're on. So it's just going to represent the high of that time frame or the low. So that's pretty much your candles there. We're going to go over all these candles that you see here. And then I'm going to give you examples on the chart. I'll show you them. These, not so much. I'll tell you what they are, but I'm not going to really give you examples of them. Mostly you'll see these ones in your flag patterns and such, but we'll get into that here in a little bit. So let's just go ahead and start off with this hammer here. This is going to be a bullish reversal candlestick pattern here. So this is where I said that you can tell a lot of information just off of one candle. So pretty much just what this is telling us here is that we opened up here, and then the sellers came in and pushed us all the way down here. But then the buyers stepped back in and pushed us all the way back up, and then we closed near the highs of the day. So that's a really good indication that they tried to push us down, but buyers came in and just said, no way, we're pushing this thing back up. So really good right there. I'm just going to stop right now. We're going to head on over to a chart and I'm going to show you an example. So I did take us over to Tesla. They have some really good examples. This will be on the daily chart. If we take a look right here, this candle will be your hammer. So open right here. Sellers came in, pushed it all the way down. Buyers came back in, pushed it all the way up and closed near the highs of the day. And then what you got was the very next day, a nice green candle. Doesn't necessarily mean it's always going to happen that way, but most of the time it will. We'll take over here. There's another example of a hammer right here. Open here, push all the way down, all the way back up, highs, close right there. What you got was this jump up here. So that's your hammer. Couple examples. I recommend going around on your chart looking for more because sometimes they don't always play out the way you think they're going to. So you can just kind of get an idea for yourself. So that's the hammer. All right, next we're going to take a look at the shooting star. It's going to be pretty much just the opposite of the hammer. So opens here. Your buyer said, let's push this thing up. Seller said, They pushed it all the way back down and then up a little, and then they closed near the lows of the day, which is a good indication that it is going to move downwards. So let's just go over and we'll take a look at that one. All right, for this one, we're going to be on the hourly chart. And if you take a look at this candle right here, this is going to be your shooting star. Opens here. Buyers tried to push it all the way up. Seller said nope, pushed it all the way down, and then closed near the lows of the day. And then what you got was over your next 4 hours, a drop of like $17. So that's your shooting star. Let's move on to the next. All right, next we're going to be taking a look at the bullish engulfing pattern. It's going to be this one here. So you'll get a nice bearish candle that just drops. Well, you'll probably have a couple little ones that come up and then it just drops, and then the very next candle will be this very nice long green candle and will close above here. So it just engulfs this whole candle. So then you'll know it's a good indication that this is going to continue to trend upwards. So let's go take a look at that one. All right, we are on the minute chart now, and if we take a look at these two candles right here, this is going to be your bullish engulfing candle pattern. So we had a bear candle here that opened here and pushed up a little bit, and then pushed all the way down, up a little, and closed it right there. Your very next candle opened down here, pushed a little bit down, and then all the way up and closed there, and just engulfed this whole body. And then what you got afterwards was this nice little rip upwards. So that is going to be your bullish engulfing pattern. All right, our next one's going to be our bearish engulfing, which is here. So you'll get a nice bullish candle that opens here, comes down a little bit, and then rips up to here, and then closes near the highs. and then you'll have a bear candle that opens here, pushes up a little bit, and then pushes all the way down, and then closes near the lows, and just engulfs this whole body of this candle. So let's go take a look at that one. All right, so back to the minute chart, and if we take a look at these two candles here, this is going to be your bearish engulfing candle pattern. So we have a bull candle that opens here, pushes down a little bit, and then just comes right back up to the top and closes near the highs. And then you have a bear candle opens the very next minute and just pushes all the way down, and then closes near the lows. So this body right here just engulfs this whole body. That's what you want to look for. So, and then what you got happening the very next couple minutes is just this downward momentum going all the way down, and dropped quite a ways. So that is going to be your bearish engulfing. All right, so next we're going to take a look at the falling three, which is going to be this one right here. So you're going to have a bear candle here that opens here, and it comes up a little bit, and then comes all the way down and closes near the low. And then it'll get three bull candles that go up, but they don't reach the top of this candle. Sometimes they can, sometimes it'll be four, bull candles that go up. And then you'll get this nice drop down with a close that's lower than this. And that's a very good indication that it's just going to tank lower. So let's go take a look at that one. All right, so we're on the 5 minute chart, and if you take a look at these candles here, this is going to be our falling three. Why do they call it a falling three? I don't know, but they do. So if we look here, you can see a bear candle opens here, pushes up a hair, and comes all the way down, and then closes here. Then we have our bull candles here, with another bear candle that closes here. And then what you got to happen the next following hour or so, just a tank downwards. So that is going to be your falling three. Let's move on to the next. All right, so next we have our rising three. So we'll have a bullish candle that opens here, comes down a little bit, just shoots up, closes near the highs. You'll have your next three bear candles here. Sometimes it's four. Doesn't always have to be three. And then you'll get your next bull candle that just rips up here, but it's got to close above here. So let's go take a look at that one. All right, so I found some examples. They're not always going to be textbook perfect, but if we take a look at this set of candles here, you can see that we have a bullish candle and three falling candles, followed by another bullish candle that closed well above. So then what we got was a nice little run up. So that's one example. Real good example just to show how they're not always textbook perfect. But there is another example here. So 1 second. So we have another bullish candle here, followed by a falling three. And then we get this struggle a little bit to close above, but then you got that close above here. So that would be a good indication to get in. And then you had that nice little run up for a while. So that would be your rising three. All right, let's move on to the next. All right, so next we're going to go over some other patterns, and these patterns are going to consist of more candlesticks than just a couple. They're going to consist of, 5, 10 candlesticks, but they're going to form a pattern that are going to give us information. And then these indecision candlesticks, all they're pretty much telling you is here is that the buyers and the sellers are undecided on which way they want the price to go. Same goes with these two. It's just that this is leaning more towards the bullish side. This is leaning more towards the bearish side. So let's head on over. We'll take a look at some bull flags. We'll explain those to you, and maybe you might see some of these in there. So let's take you over there. All right, so this is going to be your bull flag here. It's going to consist of multiple candlesticks here to form this pattern. And what we got here is a very nice long green candle. And another one, sometimes it could just be one candle or it could be three candles, but this is going to be your flag pull. And then you're going to have a bunch of candles in here. And the thing to take away here is that it's always going to coil to a point. So you can see it's high here, low here, and then it's here, here. So see how it's just coiling to this point before it breaks out. So a lot of people will wait till it gets, in here, and they'll buy. and then a lot of your other investors will wait till it gets to the top of this flagpole and closes, so they have a lot of confirmation that it's going to break out. And you can also watch for a trap too. It could get really high and then come right back down. And you can get it to bounce, out of this trend line here. It will come out here and then, come back in. Vice versa is on the bottom. But this is the flagpole. About 90% of the time it does break out. So let's go over to the chart and we'll take a look, see if we can find one. All right, so I found a bull flag over here on the minute chart for Tesla, and I drew it out here. So you can see the flagpole here. It doesn't necessarily always have to be straight. It kind of bends up, and then you got your downward trend line here. So it looks like a flag. Um, and then here it just kind of like coiled, um, and then came to a point, and then it broke out. It did close above this, and see, like I said, it could come up and then back down, but eventually it did walk up, and went up quite a ways. So that's going to be your bull flag. Um, and I would recommend that you go around and look at the charts, and try to find these patterns yourself. So that is the bull flag. Let's move on to the next. All right, next is going to be our W, or our George W. And it's just going to look like a W. So it'll come down here. You'll have your first bottom. Then you'll come up. You'll have your neck. Then it'll come down. You'll have your second bottom. And your second bottom here is always going to be slightly higher or higher than your first bottom. It'll come up and it'll test this neck area here. Sometimes it'll bounce down. Um, it'll take a while sometimes before it shoots up, or it'll just shoot right through it. And then another thing to remember with all of these patterns, is they work for the reverse side downwards. So if we flip this, you can see that it will form, like, you could call this like an M, I guess, where it comes up, and then you have this bottom, still your neck, and then your second bottom is going to be higher, and it's going to come down, and once it tests this neck, see, it could bounce up and then just shoot down. So that's something to watch for. So if you think it could be going down, another pattern to watch for. So let's go on the chart and check this one out. All right, so here we're on the minute chart, and if you take a look at right here, I would say that the W would start somewhere around in here. So you had a bunch of bearish candles that went down. You have your first bottom here, came up, created a neck, and then came down, and here is your second bottom, which is higher than your first. Came up, tested this neck area, and then just broke right through. And then it gets to about as high as where it started and higher. So that's your W there. Let's move on to the next. All right, so next we're going to have our head and shoulders pattern. It's going to look like this. It will come down, and then come back up. This will be your left shoulder here, and then it'll come back down. This will be lower than your left shoulder, which will be your head. And then it'll come back up, and it doesn't always have to come back up and meet where it did over here, um, but a lot of times it will, and then it'll come back down, and it'll create this right shoulder before coming back up and then just breaking out. And then same goes for if it was going to be going to the downside, just reversed. It'd be your left shoulder over here because it's upside down, your head, and then your right, and then it would just, shoot down. So let's go on the chart and take a look at that one. All right, so now we're on the 4-hour chart of EV Go. If we take a look at this set here, so it came down, and here would be your left shoulder, came up here, dipped all the way down. Here would be your head, came up here, came back down, and this could be your shoulder here, here. Nonetheless, it did test here and broke out, and then continue to consolidate before breaking out some more. So that's your head and shoulders. Let's move on to the next. All right, last but not least for the day is the cup and handle. So you'll have it just looks like a cup and handle here. So it will come down here, and then you got up, and then it just looks like a cup, and then you got your handle that comes down before you get your move upwards. So let's go on the chart and take a look at that one. All right, it took us over to Apple on the hourly chart, and as you can see here, it starts, comes down, and you have your cup here, comes down a little bit, creates a handle, comes back up, tests, consolidates a little bit, and then shoots up. So that is your cup and handle. It's not a very good one, but like I said, they're never textbook perfect. But there you go. That's all I have in this video for today. I didn't want to confuse you with a bunch of other ones. So let's learn these for now, and then we'll make some more videos later. So that's all I have, and we'll see you guys in the next video.